Welcome back to Lem's Cryptoverse. I think I've done over a dozen of these like how-to videos on how to, analyze blockchain slash crypto digital assets. And you know what? No one looks at them because no one cares right now. Right now, the digital asset, whatever you want to call it, crypto market is inefficient. Everyone's into NFTs and meme coins, and that's it. And everyone's using technical analysis, which some say is astrology for men. But let's get started. So today we're going to be discussing use case. What's a blockchain's use case and how to analyze it? And this is one of the easier concepts because it relates to, in a way, how to analyze any use case. But still, it's important to do this for a few reasons, and you'll see why. As usual, I'm going to be talking fast. I'm going to try and get this done within 10 minutes. So, as I said many times, crypto projects, say it over and over and over, must be analyzed like a three-legged stool. I also say holistically. They should be analyzed holistically, meaning don't look at the stock charts or crypto charts. Don't look at sentiment, look at everything together. So the first one to look at is macro, geopolitics, interest rates, what's going on with the economy, fundamentals. By the way, number one, macro, it's very important. It has to do with systemic risk and the movement of crypto on a systemic basis. The second one is fundamental. This is what's called unique risk, idiosyncratic risk. This is what no one's looking at. And today we're going to look at use case and TAM. TAM is total addressable market. And third, we already talked about that, tech analysis. So use case and total addressable market. And in many ways, this is the traditional way of looking at things. And remember, blockchain projects are simply, and when I say blockchain projects, I'm simply talking about crypto. These are just Web 2 projects, like software projects or like apps like Facebook. These are Web 2 projects that have moved to Web 3. So you don't even need to call it Web 2. It's basically analyzing any industry, especially in technology. That's all we're doing. But in crypto, we call that Web 3 because we've changed the train tracks, right? We've changed the operating system that these are operating on. They're not operating on Apple OS, what's it called? Or Apple, I can't remember, Apple iOS or Apple or Google Android or Microsoft Windows. They're operating on the blockchain operating system, and there's so many of them, and they're called layer 0, layer 1s, things like that, but not layer 2 and 3. So Web3 also has new use cases, and they're typically called blue ocean opportunities. And you can see the example below from Isari for Solana, but you can read this on your own. Okay, slide 4. Very important. Do these steps if you want to determine and understand the use case for a particular crypto project. Number one, what problem is it trying to solve? It's not trying to solve a problem that ain't good. Okay, maybe it's creating something new, but you're going to have a lot of cold start problems. You're going to need a lot of money for incentives. It's a totally new opportunity. 2, evaluate the feasibility of solving this goal. 3, will the project be scalable? Grow. Can it grow quickly and easily to support its goal? And number 4, how competitive is the landscape? What's the industry structure? As popularized and written by Michael Porter, for example. Like, what's the structure? Is it an oligopoly, monopoly? Is it pure competition? What's it like? So I'm going to give an example. As an example, I was going to give Uniswap, but you know what? That's too easy. That's a DEX. All you have to do is look at the market for traditional brokerage in terms of crypto, what size that is in TAM, and you can look at stock brokerage. But we're going to do something different. We're going to look at a totally new crypto project. This one's called Teleport. It's using the blockchain called Solana. We all know Solana, right? So here's what we do. This goes back to the 4 steps I mentioned before. Number one, is this feasible? It's possible. And this is going down other numbers. What's the competition like? So what market is it addressing? It's addressing ride sharing. It's a decentralized ride sharing protocol, also known as DePIN on the Solana blockchain. So you can see here from Statista, it's a very large market, and I would say it's understated. It's $166 billion US dollars in 2024, and it's supposed to be growing up to 215.7 by 2028. But this omits autonomous. Once we get robo-taxis, the elasticity of demand is going to increase this to a huge number of about $1 trillion by 2030, something like that. And that's maybe in the US alone, and perhaps as high as $5 trillion in 2030, according to ARK Invest. So what's Teleport trying to do? We already have Uber and Lyft and Didi. Trip, it's also called Trip. That's their protocol. That's their loyalty points. Basically, Teleport's going to do is cut the operating costs that Uber has. And here they're showing on the left side how much the costs are and where the proportions are. Like 55% goes to the driver, 45% goes to Uber. And then and on the right side is Teleport. And they're showing that they can drop on the top right corner 24%. They can reduce cost by 24% compared to Uber. I'm not sure if this is exactly true. I'm guessing more like 10%. First of all, I analyzed Uber separately outside of this, and Uber has a 25% take rate, okay? And I lost track of what I was saying. Oh yeah, what I was saying is Uber, over here it says 45%, so that's not right. So within the 25%, then cost to reduce from that. So I think there's an over-exaggeration here because they're looking at 45%, and which I think the right proportion is 25%. And I looked into Uber's expenses line by line, and I don't think it's going to be as high as they're saying. But the narrative is that Teleport is going to reduce costs. And I agree with that. I think that's true. So what you need to do is to do a deep dive and determine exactly how many of these costs, what proportion is really going to be reduced. Because I'm looking here closely. It says like certain costs are going to be like fixed and they said asset impairment. But basically, I think they're going to have advertising costs, R&D, and infrastructure. There are going to be some infrastructure costs too, like for the app. They're going to have the app. Their app, it's going to be called a DApp. It's going to be like Uber's and Lyft's app. But you need to determine the cost structure for that. And next, once we determine, as I said before, what's the TAM and addressable market, what's the size, what's the growth, who's competing it, what are they selling, and they're selling that they can reduce cost. Then you look into the protocol itself, into the blockchain itself, which doesn't have a coin out, by the way. So you cannot trade this. And so you have to look at how they're doing. So I looked up the number of riders, the signups, the rides complete. I looked where they're located in the world. And you could see, this is just two examples, but you could see on the left side, I showed those green blobs of where they're located in North America. But if you turn the globe around, you could do that on the website. You could see that they're in Asia too, because a large part of the market is in Asia. But worries me if you look at the right side, you could look at trips. The trips are really high in the beginning and they've been coming down. So that's a no-no. So that's not trips. I think that's drivers. The number of drivers was at 210. Now it's been coming down. So I think you need to be careful with this one and wait until you see increases in rewards, referrals, trips, and drivers. Okay, you need to see and the number of rides. You need to see all of those KPIs, key performance metrics or indicators going up. So I think we're going to complete this in 10 minutes. So I'm going to finish this off and talk a little fast. Sources of information. Sell-side research firms, not too much. Buy-side if you can get it. Subscription research is very good. from Statista, especially, I didn't put it here. Messari is very good for this kind of stuff. And I should have put this here as a bullet point. White papers are good, including competitors. I didn't mention here, but Web2 companies. We mentioned Uber and Lyft. Financial news sites, Bloomberg, Wall Street Journal, S&P, CIFRA's industry surveys, podcasters like Bankless, YouTube, and of course, Telegram and X and Twitter and Reddit. Well, I hope you enjoyed this. I just want to leave you with some final thoughts. Some of the more interesting use cases are ones that are not widely used. And instead of focusing on the ones that are competitive and widely used like DEXs, meaning decentralized exchanges, maybe you should focus on, and we should focus on together, on DePIN, decentralized physical infrastructure. And this includes decentralized storage like Filecoin, decentralized compute, GPUs like Render, decentralized mapping like Hivemapper, which does have a coin. By the way, Render has a coin too, and so does Filecoin. And I like the name for mapping. They use Honey. That's the name of the Hivemapper coin. It's called Honey. That's a very good name. And lastly, decentralized hotspots in mobile telecom. And that's Helium. And of course, they have the HNT coin. So lastly, avoid competitive areas, perhaps like DEXs, or areas where the Magnificent Seven, you know who they are, have a lot of control. And I'll give you some examples. I know you know them. Alphabet / Google, Facebook / YouTube, Microsoft. Try to avoid those areas because those companies are not going to give up control easily.